Going live.
Hi everyone, welcome to Bank to the Future Live. Today we have a special guest, Jacob from Vinta Capital, and we're going to dive into indexes and why they're essential for the crypto industry. Myself, I'm Adam Vaziri. I'm an advisor to the board at Bank to the Future. Unfortunately, Simon's not here today, but I'll be taking the lead on these questions. And I realize a lot of you do have a lot of questions surrounding this great offer that's on the platform at present. And so we're going to really delve into this subject, really to give you a clear idea about why indexes are essential in crypto. And to start off, what we want to do is really get a background from the company, from Jacob himself, for him to elaborate on why he set up the company in the first place, to look into the Vinta Capital product and why it's essential for the market and how it compares the context, if you will, surrounding other products in the market, and then get him the opportunity to talk about his current fundraise. But before we dive into that, a little bit of kind of background about why this is such an issue within crypto. Whenever you think about what is the price of Bitcoin, maybe your first instinct is to just go to CoinMarketCap, and you go there and you look at the price and you think, well, that's the price of Bitcoin. Oh, it's 13,800, 13,500. But what does that price really mean? Do you ever ask yourself that question? You see the price and you take it as is, take it as granted. But when you actually delve into, oh, well, what does that price mean on CoinMarketCap? Where is that information coming from? You see, in fact, that it comes from multiple exchanges, over 400 exchanges that are feeding into this price. But the issue is that some of those exchanges are not regulated. They may not be trading in a way that other exchanges which are regulated are trading. And so therefore they are muddying the waters, so to speak, in relation to creating the Bitcoin price. And there are other reasons why regulated indices actually exist, but that is one of them. You cannot simply rely on CoinMarketCap to give you the Bitcoin price. And going back in terms of history, this is not a new problem. Back in 2015, there were companies that were looking into how we can regulate this market and provide better pricing that institutions can rely on, but also individuals in determining what is a true price for Bitcoin and other crypto assets. So I'm really excited to learn more from Jacob, because this has always been on my mind as I've worked in the crypto sphere for such a while. Seeing CoinMarketCap every day is changing and wondering, is this the real price? Well, that's what we're going to find out today. What is the real price of Bitcoin, and how do we arrive at that conclusion? So Jacob, I'm here to learn as well. So what I'd love to start off, Jacob, is just really hearing a little bit about yourself, and how you came to set up Vinta Capital, and tell us about Vinta Capital and how that came to be established, your partners involved in that venture, and then we'll delve into the product after you've given an introduction of yourself.
Sure. Thanks for that great introduction to Vinta Capital. My name is Jacob. I'm the CEO and co-founder of Vinta Capital. We are a regulated index provider specialized in crypto assets. And a little bit about my background, and then some short description about the company, how it all got started. Well, previously I worked at Nordea's trading floor, and Nordea is the largest Nordic bank. I sold structured products to professionals and did portfolio analysis. And before the trading floor, I worked at the investment banking division at the very same bank, advising corporate clients on FX hedging using derivatives. And before banking, I was a researcher at Stockholm School of Economics, the highest ranked university in the Nordics, where I researched blockchain and Bitcoin from a societal perspective. It was commercial research, but very, very interesting. And that's where I fell in love with Bitcoin and has been in love ever since. So that's briefly my background. What about the company? Well, as I said, Vinta Capital is an index provider specialized in crypto assets. And our team has experience from crypto research, trading, data engineering, investment banking, FX hedging, and financial law. So it actually started with me, Håkan, and Marco. Håkan is our CTO, and Marco is our head of legal. And I wanted to start a company with Marco and Håkan for a long time because they are just great to work with. And we started by thinking about what kind of market do we want to serve? Where can we find a problem and a solution? And obviously, we started with the crypto market because it's the most exciting market that is live today, and where you can create a company and have a lasting impact on the world. So we actually talked for 6 months about what we should do, what does this market need that we also can bring to it. And we settled on this idea of a regulated index provider, because the crypto market needs maturity, compliance, and accurate pricing sources, and accurate indices. It's essential, and it's a key infrastructure piece that is really needed for the market to go to the next level. A lot of people talk about bringing institutions to crypto, but we actually work on making that happen. So our purpose is to make crypto investing safe, simple, and compliant for institutional investors. Those are the people in our target group, and all our actions push us toward that goal.
Great, that's wonderful. And like, could you tell us, where are you set up? I believe that you're in Sweden. How are you set up as a company? Is it a Swedish company? How are you set up? Could you tell us a little bit more about that, please?
It's a Swedish limited liability company, so very simple structure. It's owned by me, Marco, and Håkan. We own a third each, and we started the company in May 2019. We did a small equity raise in order to achieve 2 things. Firstly, build the product, i.e. build a backend and the index machine. And secondly, get regulated, which is very much a necessary step in order to bring the regulated financial products to life that we want to do.
Can you tell me, that's wonderful. Can you tell me more about your 2 other co-founders? You mentioned the CTO. What was his background before he got into the crypto sphere, the CTO?
Yeah, Håkan Holmberg is our CTO. I've known him for 7+ years. And we first got to know each other when we studied mathematics at Stockholm University. And Håkan is actually one of the best mathematicians I've met, because he can really put his head in the wall for weeks and weeks until the problem is solved. Most people can do it for a minute or 2. I can do it for maybe 1 or 2 days, but he can really go for weeks until the problem is solved. And he's truly great in that role as a CTO, and he has built the index platform, and he has developed index platforms previously for the Swedish government. So that's Håkan's background.
So he has a specialized experience within index platforms. He's worked precisely on that type of product, but in a different field.
Exactly.
Right. And the other person that you mentioned, your other co-founder, could you tell us a bit more?
Marco Poblete is our head of legal. He worked at Lindahl Law Firm with a focus on strategic contracts and financial law. And Lindahl is one of the best law firms in Sweden. And he studied law and has a master's degree in law from Stockholm University. I also met Marco during my studies, however, this time at a networking group called Nova, which is a talent network for students. And Marco is very fond of telling the idea of how we first met, which is that he pitched an idea to me of a startup that he thought would be a great company to build, and I crushed it, and he really liked me for bringing so harsh words to his baby at the time, and we've been friends ever since, and trying to find different companies that we could start together, and Vinter Capital was then born after years of trying, and we started with trying to kill this idea as well, but we couldn't. So we tried to kill it for a year, and then we realized this is a solid idea. This is a great business, so we should start it.
Let's talk about this problem a little bit. So, as I said in my introduction, people really just don't know what the price of Bitcoin is. But when you're trying to kill the idea of creating a regulated index, when you're looking at the market, what are you seeing in the market that you're seeing the gap? What is that gap that is in the market, so to speak? When you try and say, okay, we're going to bring this solution to the market, which is a regulated index, but when you were looking at the market, what were the gaps that you were seeing?
Yeah, so you mentioned coin market cap, and I mean, this is a price aggregator, and their goal is very different from Vinta Capital. So obviously, it's not the case that they have the same features and benefits. Coin market cap is good if you want to have a quick overview, but it's not really good for building regulated financial products. Then you need to be very precise about the methodology. How do you arrive at that price for each asset? And also, how do you combine assets in a diversified portfolio? Because institutions today, they own index products, diversified products, and they're not going to go out and buy Bitcoin or Ether or a single cryptocurrency and put that in their portfolio. Well, some will, but not many, because there's idiosyncratic risk by investing in a single asset. And so you want to spread that risk and diversify a way to get an exposure to the crypto market as a whole, because it might represent a bet on a new economy, a decentralized world, or a bet on something else. And for that, you need regulated indices. That is a key ingredient in any financial product that is traded on a regulated exchange. And so that's why this role that we're filling is very important. It's a very old role. It's a traditional role, but we do it in a new market.
That's great. And just looking at I can see on the institutional side, which is of course your target market, that they need this as a piece of infrastructure in order for them to participate. But when you look at the broader crypto market, do you see that there is a wide empty space where there isn't so many regulated indices, and that is a greenfield area? If you compare it, for example, with, as you mentioned, price aggregators, etc., you don't quite see as many regulated products, or did not see as many regulated products. Did you see the opportunity there in terms of what was already out there in the market?
Yeah, when we Google for crypto index, of course, a lot of different pops up, but we didn't really see somebody who's building for the crypto market exclusively and building regulated indices. There are some academic indices here and there, but they're not really focused on being tradable or being compliant or being used in a financial product, because if there are so many different aspects and difficulties in trading crypto, ranging from trading to the custody, and you need to think about, you need to put yourself in the shoes of your client and that is going to trade this, and make it accessible and simple for them to follow the market, but B, do it in a way that minimizes the tracking error, so that you actually can trade tightly to the index and actually follow the theoretical index, and a lot of different other aspects of of creating a good index that is able to be tracked by a professional institution.
So let's talk a little bit about the regulated index, because I mean, people see price feeds. Also, we need to look at it also from the perspective of not necessarily people that are familiar with a regulated index. But let's try and, look under the hood and explore this idea of a regulated index. First, why does it have to be regulated? That's the first question I would have. And then secondly, what does that mean? Applying regulation to an index? What are the implications of that? If I want to create an index tomorrow, just go and publish it now. But if when we call it a regulated index, how is that different?
Yeah, so it's regulated because the company that produces the index is a regulated company. And in our case, we are under the financial supervisory authorities and an extension under ESMA, the European Securities and Markets Authority. And this is because this matters because accurate pricing is very, very important to the regulator. We saw, for example, what happened in the LIBOR scandal, where banks manipulated the LIBOR index and thereby essentially screw their customers. And accurate pricing is very important for a healthy financial market to function. And indices has been more and more important every year. We saw, for example, in 1990, the market, as a data point, the market was roughly 0% indexed, meaning that ETFs and index funds hadn't really caught the attention of the everyday investor, be it the retail or the professional one. But since then, every single year, money has been flowing from active investing, trying to beat the market, into passive investing, that is just tracking the market and tracking an index. And today, at least half the market is indexed in the equity space, most notably S&P 500, MSCI World, those types of indices that track the equity market, the global equity market. And since there's so much capital tracking these indices, and there's a lot at stake, and when, for example, an index provider decides to rebalance and include a country in a global equity index or not, that can have a huge effect on that country's economy. And I think that we will see similar developments in crypto. Right now, many people are investing in a single crypto asset or just making small concentrated bets. But as the crypto market matures and as you see inflow of investors that look at this more from a portfolio perspective and just want to get a good risk-adjusted return in their portfolio, they will go for the diversified way and invest in an index. And so I think that most financial products that are tracking crypto prices will be financial products that uses an index to dictate what is the weight per asset, how often do you rebalance, what determines what assets are included and not included, and so on. So this is all these decisions are taken by the index provider, and all these decisions are very important for the market because there's a lot of capital that is tracking the indices in the traditional equity market and in the bond market. And I think within a few years, that's going to be the case in the crypto market as well.
Yeah, I mean, I think there are two aspects to this. If I can explore that idea a bit further, there's one aspect which is how do you arrive at a price for Bitcoin or some of these other assets, and how you weight those price into that particular index, and then how do you create a financial product that is based on that price, that pricing system. In relation to the pricing system, one thing I would love to explore here is, as I understand it, due to regulations such as the European benchmark regulations and other such regulations, there is a much greater onus on the index provider, the person who's providing the price, to ensure the transparency of where they are obtaining that data and accountability surrounding that data. And I think that's one of the key distinguishing factors with when you say this is a regulated index as opposed to this is just, you know, an aggregator.
Yeah.
There's a reliance, and it is regulated because you're not taking every single market that's out there, presumably, to flow into the price of Bitcoin. So could you just talk to just the point around how you arrive at even a price of Bitcoin and what the methodology is, or not necessarily telling us the secret source of Vinta Capital, but telling us a little bit more about, you know, the processes that you go through to ensure that this is a robust index compared to what's in the market?
Sure. So the way we calculate it is by having connections out to a bunch of different crypto exchanges. And all of these exchanges are pricing sources for the index. And every pricing source needs to fulfill objective and transparent criteria. And these criteria are approved by the regulator. And this criteria really filters through so that we get high quality exchanges. And if you have looked into the different quality of the varying quality of exchanges, you know that it's very different. It's not really the case that that all are created equal. For example, in the Bitwise ETF report, we saw some of the problems that has occurred after people are faking their volume and not maybe taking their business to be a very long-term business, but more of a short-term gain. So how is it calculated? Well, we have the eligibility criteria on the exchange level, and then we fetch transactions from these exchanges. And the transactions are being validated with an external source, and we clean the data. We then apply the index methodology, which are the rules of how we go from raw transactions to a price for each asset. It's basically a weighted average of the transaction prices. And then we end up with a price for each crypto asset at a certain point in time. And these single asset indices can then be combined using, for example, market cap or trading volume or any other metric to create a diversified index that is tracking a basket of crypto assets. So that's how it's calculated. And it's really key to have good pricing sources, because if you have garbage in, you have garbage out. So that's that is a key aspect of the methodology.
I mean,
and I think that one of your questions there also was how the financial product is created. And I think it's important to distinguish here that we are part of the creation of this product. The index provider is a data company, and it's needed to create the financial product, for example, an exchange traded product. But in order to create it, you need more parties. The issuer is the company who is issuing the exchange traded products. And you also need a custodian to keep the assets safe. And you need a market maker to provide liquidity. So there are a few different roles that are needed in order to create an exchange traded product. But the index provider is one of them, and they are specialized in writing the index methodology, handling the data, and making sure that it's going to be a product that is tradable.
Fantastic. Yeah, that's really helpful. I mean, without delving too much detail on this, what I think might be helpful for the viewers to understand is we've talked that you are regulated in the sense that you are producing a product that has a higher degree of transparency and accountability than other products in the market. But what does that mean in terms of your operations, like to the degree that, you have to have disaster recovery and all of these other kind of operational factors that distinguishes you as a company from someone that may be, just providing an API and a price? What are the implications of being regulated? Just shortly.
Yeah. Well, the implication is that it adds trust to the index and it adds trust to the product. And this is very important for institutional investors to know that they can trust in the process and that the price is accurate and that there's no conflict of interest, that we are unable to manipulate the prices even if we want to, because we have these processes in place. And yeah, I would say that's the outcome of having of being regulated. And we can talk about the purpose of the benchmarks regulation, which is really three different legs: reliability, verifiability, and accuracy. And these three are inherent not only in the organizational structure that we have, but also in the technological architecture. So we have structured our organization in such a way that the product and development department, who creates methodologies and publishes index values, is a separate department from the remaining organization. And we also have an index committee that ensures that index values are published, even if the automated systems are down. So if every crypto exchange crashes, we have an obligation to calculate what the price is, or say what the price is, or estimate what the price is. And this consists of experts in crypto and financial markets. And then we have an oversight function which expects the product and development department and ensure that all our indices are calculated in accordance with the methodology, so that we actually do what we say that we do. And this is a key role for instilling trust in the product. And frankly, trust is a key issue for the crypto market. There's a lot of reputational risk according to the larger institutions like banks or pension funds. And if you can reduce some of that worry by being regulated or making sure that you have a transparent process, then you can at least counter some of the arguments that you receive for why they shouldn't hold crypto in their portfolio.
Understood. Fantastic answer. Thanks, Jacob. What I'd like to now talk about is really, we know that, let's say, the market is maybe not so well served at the moment in terms of regulated indices, but things have moved on since the early days of crypto, however, and there have been some initiatives around introducing indices, at least in the United States. I believe at present, CME has an index price index product for Bitcoin. And I believe that Bloomberg partnered with Galaxy Digital in respect of their own Bitcoin. They have a weighted, I believe, index for crypto. Could you please talk maybe just about the other players in the market and how Vinta Capital kind of fits in with those other players, maybe distinguishes in terms of strategy, or maybe the market is big enough for everyone to succeed? That would be great.
Yeah, sure. Well, firstly, I think the market is big enough for everyone to succeed, especially with the growth that we have seen in the crypto market historically. It is the future of finance, and I think that is going to be room for several index providers. In the traditional market, we see the three largest index providers taking up roughly 80% of the market. So S&P, MSCI, and FTSE, they stand for roughly 80% of all the assets in the world, are benchmarked against one of their indices. And when it comes to Bloomberg, who created an index with Galaxy, that is, it is a basket of crypto assets, but it's capped at 30% weight for each asset. So they're really imposing a very strong opinion and a very strong restriction on the market, whereas our top 5 and top 10 indices are truly passive. In that sense, we are capturing the crypto market and not a distortion of the crypto market. So that is a key difference between Vinter's indices and Bloomberg's index. The Bloomberg index is a Bloomberg Galaxy index. I believe it was created for a private fund and not really to be used as for exchange traded products, and that's a key difference. You mentioned the CME, and that is definitely, I would say, our strongest competitor at this moment. It's created by CF Benchmarks. It's a company with great people behind it. They have great indices. If you go to their website, they have a single asset index for a few different crypto assets. And CF Benchmarks also have the EU BMR status that we have, although in the UK. So it's not 100% certain that will carry on after Brexit. But nevertheless, they have a similar regulatory status as Vinta Capital. So they could also create regulated indices for institutions. And their first client was CME. And since then, they got acquired by Kraken last year for 100 million euros. Keep in mind here that Vinter's valuation is 20 times lower than that. So I think it's a good bargain, a great investment for the people here at Bank to the Futures platform. And since the acquisition of CF Benchmarks, and Kraken turned them into an in-house index department, and they are powering Kraken's futures market. And that is a key differentiating factor that Vinta Capital will go out and actively pitch and be focused on bringing in as many index users as possible and launch new financial products, for example, with banks or with issuers. And this is simply not in the strategy of CF Benchmarks, I believe. So there's a key difference there in our go-to-market. I think besides this, it's also very important for us to be independent from our pricing sources. And Kraken is a pricing source in our index, and Kraken is also a pricing source in the indices of CF Benchmarks. And I think that this is a key differentiating factor on the product side, besides the strategic difference.
Fantastic. Thank you, Jacob. Yeah, that was great. We've got, I think, an overview of the product, what the background is in terms of regulation and why index pricing is necessary in order to build other great products. What I'd love to hear about now, a little bit about, is kind of how the business is progressing in terms of you bringing your product to market, and how what kind of headway have you made in terms of your business development?
Yeah, sure. So as is outlined in the pitch deck and the presentation, we have focused the first year on building the product and getting regulated. And now comes the second step, which is to get as many large users of our indices as possible. And we have a few conversations, and these are pretty long sales cycles. And I believe that we will have the first large institution that is using our indices within a year. And the business should be profitable within 2 years. So that is the timeline. And that is the path that we are on. And the milestones that we set up in the first round, which was done about a year ago, was to get the product done and get the license. And we accomplished both of those. And now we turn to the other parts of our journey. So that should summarize roughly where we are in the timeline of our journey to become the largest crypto index provider in the world.
And when you talk about, the sales cycle, what kind of sales cycle is it? Is it roughly around 6 months to close a deal, for instance, or is it fairly swift, or do you have to work with the issuer to actually build a product? In which case, is it a longer process?
It's a longer process. It's 6+ months, and it's really, you get tightly integrated with each client, and this is on the one hand, it adds to the complexity of the business, and it takes longer to get there. But on the other hand, that is a key part of the plan, because then it's much harder for someone else to go in and compete, because it can't simply go in, dump the prices, and steal the clients, because they're tightly integrated to the index provider. And this shows in, for example, the fact that in traditional indexing, index providers enjoy a 97% customer retention rate. So once you get a client, they stay a client.
Understood. And how are you finding those initial conversations are going with your prospective clients? How are things progressing? Are you pleased with the results so far in terms of the response to the product that you've built over the past year?
Yes, we're pleased with the results, and we're very excited for the coming few months. I think we will see some great innovations in the crypto space, and I'm very excited to see these new products come to life.
Fantastic. So in the last little bit, I would love just to hear kind of what the opportunity is for the Bank to Future investors. And I believe you may have a slide or two to share if that's helpful for you. Just to explain to people that may not have seen this pitch yet, what the opportunity is for them.
Yeah, sure. So the opportunity is to participate in Vinter's equity round, and we have raised roughly $500,000 as of now, and we have room for a few $100,000 more, $100,000 more, and the opportunity is to own a part of Vinta Capital. We have a evaluation of the company at 4.5 million euros, and we have doubled our valuation in the last year. I can't promise that we will double the valuation every year, but hopefully that we will have a very aggressive growth path, not only in the valuation, but also in the geographical expansion of the business and the product expansion. So this is, I think, a very, very good opportunity to invest in a part of the market that is really underserved, namely the institutional part of the crypto market.
That's great. Well, thanks a lot, Jacob, for providing that insight. And as we have to always provide a little bit of a disclaimer, we're not providing investment advice. Do your own due diligence when looking at this opportunity. But here we've given you an introduction really into the indexing market and how Jacob and his team are tackling it. Now it'd be great to hear maybe from Mida whether we have any questions from the BF community. Things that we can pick up, things that maybe Jacob can address while he's here.
Yeah, it's been cooking in the live chat. Actually, just going on from what the offer is. So what is the key return on investment?
I'm not sure I understand this question.
So so for example, some investors are curious as to, okay, so if I invest in this, then will there be a dividend along the line?
Okay, yeah, sure. So a dividend is definitely possible. I want to build this business. I want this to be the last company that I build. And so dividend payment is definitely on that path if we become a large profitable index provider, which I think we will. And that is our first and foremost goal, is to create a healthy business for the long run. And I got on one question also previously in the forum from Bank the Future, and this connects to this, which is if we have an exit strategy. And other than dividends, I think that a possible return on the investment for someone who participates in this equity round is that Vinter gets acquired by a larger index provider, say S&P or FTSE, that wants to get into the crypto market and wants to get our expertise in this market and get our clients that we have been acquiring for the years up until that point. It's often the case that startups with a license gets a pretty hefty sum of cash in an acquisition. So those are two possible exit paths for an investor.
Okay. And just one last question as well. So on the Bank to the Future platform, obviously we have our own, Adam, you can comment on this. We have our own restrictions, but with Vinta Capital, are there restrictions on what type of investor can invest? So for example, are you taking investments from US investors or is it excluding?
Not from US investors, I believe.
Okay. All right, so a few questions from the live chat, and you may have already covered these whilst you were talking with Adam, but be good to have like a quick overview if you can, if they are repeats.
Yeah.
So Curmudgeon, is there a problem in using CoinMarketCap when you create, for example, an index coin or a crypto ETF?
Yes, you can't use it because CoinMarketCap is not a regulated index provider. So it's impossible to use it in a financial product trading on a regulated exchange. And yeah, so that's not in the cards.
That's the answer to the question. That's why Vinter exists, essentially, because CoinMarketCap should not be used for financial products.
Yeah, it can't. And also to add to this is why can't the fund do it themselves, the issuer or someone else? It is because the party that holds the assets needs to be different from the party that calculates what the assets are worth. And this is to prevent conflicts of interest. And this is really the heart of the benchmarks regulation. It's there to protect investors so that it's not only accurate pricing, but also that the one who provides the pricing is independent and thereby have no incentive in doing it in the wrong way. So that's just a small clarification.
Thanks. So John H has asked, I've read the Bitwise that Bitwise has surpassed $100 million in AUM. Any comment on them and how, if Vinta Capital is any different?
Yeah, I talked to their CEO a few weeks ago, and it was a great chat. Bitwise is an asset management firm. They're first and foremost focused on bringing assets to their index fund, and that is a private index fund, and it's in the US. So this is a bit different. It's not a product that is trading on a regulated exchange in the European Union, and so therefore they can be their own index provider, because a private fund is a much less regulated vehicle, and that's good if you want to get up and running quickly. And it's really good that they have $100 million, but in the grand scheme of things, that's a very small amount of capital if you look at the traditional financial market. And we are aiming for creating products that gets billions and billions of dollars in asset under management. And we believe the path to do that is to build products for the regulated market, because the potential capital inflow is just that much greater. But I think Bitwise is doing a great job, and they have an excellent newsletter if anyone is interested in reading about the market.
So you have a good relationship with Bitwise.
Yeah.
Are there any other? I mean, there is a question here that lists a few names that could be that. Would you consider, are they competitors or potential customers, like Grayscale, Pantera?
Grayscale and Pantera are two potential customers. Pantera could, for example, use our indices or a custom-built index to benchmark their fund against. I mean, Pantera has a VC fund, they have a Bitcoin fund, and have a bunch of different funds, and they could use an index provider to benchmark their returns against, in order to be able to brag to their LPs about outperformance of the market, if there is outperformance, or maybe to clarify in their reports that we took this risk and it paid off in this sense. So we are overweight in this asset and underweight in that asset. And in Grayscale, they are also a potential client. However, they're based in the US, and in the US, there's not this regulation that exists in Europe, where you need to have a segregation of duties between the one holding the asset versus the one calculating what the assets are worth. Just briefly simplify what the BMR stands for, the benchmarks regulation. So if it is the case that the regulation that we have today in the EU gets implemented and adopted in the US, then I think there's a bigger opportunity for us to go to the US. But right now we stay in Europe, and the market here is definitely large enough. We see that the current issuers that have products tracking, for example, the price of Bitcoin or the price of Ether, have more than $1 billion in asset under management. So there's definitely a healthy market here in Europe. And so we're going to focus here because that's closer to us. And also we do have a larger value add when somebody needs to use it for legal reasons. Still, it's the case that we can have a US client for business reason. Maybe Bitwise or Grayscale want to outsource the index development because they want to focus on raising assets, or they want to increase trust in their product and brag about the independence of using a third-party index provider. That is definitely possible, and we can have them as a client. And that's what we saw that's what we see in the traditional market, where index providers are used solely for the business value add that they have. It was a long answer, but it's hopefully clarifies things. So we are a data company. We sell data. Grayscale, Bitwise, Pantera, they are asset managers, and so they are not really competing with Vinter.
Right. Okay, so Gadeco has asked, if you have a fund, why do you want to buy a regulated index instead of making it yourself? How hard is it to become a regulated index provider?
It is hard. It took us more than a year, and we had a very talented, actually several talented lawyers to help us do that. And it is because you need to convince the regulator, firstly, that you are going to calculate accurate prices, but also that you're going to do it in this totally new, scary market that is the crypto market. So it is difficult, and they cannot do it themselves. They're not allowed to do it themselves if they're building products for the regulated market, for the reasons that I mentioned, namely that there's an inherent conflict of interest. So even if they could do it, it's not allowed to basically have your own index if you're in the EU and you want to build regulated products. So that's the reason.
Thank you. A question from Streamer Specs. You mentioned you raised money a year ago. How have those investors holdings developed in value if you look at it today?
They doubled.
That's the short and sweet answer for that. Yeah, basically,
I can't
you should
promise
invest.
that it's going to double again in 1 year, but we can hope so.
Yeah. Okay. Curmudgeon has asked quite a few questions, and I think they're quite good. So there's another question from them. What happens if a fund uses a non-regulated index?
They can get heavily penalized. So the fees that a fund can face is 2% on global revenues calculated on group level, and persons who are responsible can be liable of up to 500,000 euros out of their own pocket. And thirdly, the financial supervisory authorities can shut down the business effective immediately. So non-compliance is not fun. It can be severely punished, and yeah, that's of course something that is very helpful when we go out and sell this and pitch this to funds and asset managers. But really, it signals from the regulator that they take this seriously. It's not just something that they have on paper that, yeah, you should have this, or it's nice to have this. It's really, this is a
quite
serious
important
piece of regulation. Yes.
Yeah.
Yes. And that's why it's also so hard to become a regulated index provider, because those providing this service are important in the eyes of the regulator for a stable financial market.
Okay, so another question from Curmudgeon. I hope I'm actually pronouncing it right. I have no idea if I'm pronouncing it right, but it looks like Curmudgeon. So if institutional investors like pension funds and family offices increasingly start investing in crypto, how does that affect Vinta Capital and your potential value for the market?
Yeah, sure. So since we take a fee based on the asset under management, if the asset under management doubles, our revenues double as well. And the asset under management can grow in two ways. Either capital inflows, for example, a pension fund wakes up and wants to invest a portion of their assets, maybe 0.5% or 1% of their capital into crypto. Then you have a capital inflow into the product, and that has a direct effect on our revenues. And the second way is for the AUM to grow is price increases. So if crypto prices double, our revenues should double as well. And I don't think pension funds will invest in crypto tomorrow or next year, at least based on my conversation with some of the CEOs of pension funds in Sweden. They have a view on crypto, and it's not positive right now. But I believe that will change. And the asset managers that will allocate, I think, are hedge funds, alternative investment funds, family offices. And Fidelity did a survey in June this year where they asked 800 asset managers, half of them in Europe, half of them in US, about their appetite for crypto. And in this survey, half of them said that they want to invest at least 0.5% of their portfolio to crypto within 5 years. So if you want to model what kind of capital inflow could come in within 5 years, one interesting number is that there are 5 trillion euros in alternative investment funds in Europe. So what if half of this capital allocated 0.5% of their assets to crypto? What kind of capital inflow are we looking at? And then you get slightly more bullish on on the future for companies such as Vinta Capital or other firms that provide these services to institutions.
Yeah, Casso, somebody in the live chat has just mentioned, they think the pension funds will wait until there is a Bitcoin ETF.
Yeah, probably a Bitcoin ETF or maybe a Vinter 5 ETF capturing the 5 largest assets in the crypto market, or the 50 largest assets in the crypto market. I think an ETF would definitely be a huge milestone for crypto in order to get institutions to travel over that bridge, at least have their capital travel over that bridge. And once their capital has traveled over, they will allocate more time, more resources, invest in technology, invest in knowledge. And I think that's ultimately what will be a very positive wave for the very small crypto market to make it grow and be much better.
Yeah. Okay, I am done with the questions
Great.
from the live chat, but I just wanted to comment on that because since Simon started the retirement plan B, there have been a few, they're not even investors, just people that have inquired and want to know about crypto and how they can use that for their pension. So it's been really interesting to see new, old investors seeking like a new basic, like a new financial future. Yeah.
Well, Jacob, thank you very much for all of your time and all of your insights about the index market and how you have constructed your business and your vision surrounding that. I think everyone has a greater appreciation about what Vinta Capital is doing and is aiming towards, and why it is so special in terms of if you want to provide an index in the European market, at least you need to be regulated. It's a must. It's not an option, it's a must. And that market is not very well served, and that market is growing as more products are developed, including as we are hoping and anticipating a potential ETF in the future. So, it's been really helpful just getting your insight here, and hope everything goes well with the fundraise on Bank to the Future. To all of the Bank to the Future investors, please have a look at the Vinta Capital pitch. Please do your own due diligence. It is always high risk, high reward. We're not providing any legal advice. We're not providing financial advice. Please do review the pitch carefully. And if you have any further questions that follow on from here, I'm sure Jacob would be free in the investor forum to address those when you're ready for that. So again, we thank you for your time, Jacob, and look forward to that the pitch is a success. All the very best for you and your company.
Thanks for having me.
Thank you.